Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we are going to learn a tutorial on extraordinary items, that includes your gains and losses in regards to the same. As you can see over here in these two tables, there are two things that is given: the net profit after the extraordinary items attributable to the shareholders of the listed companies, that is 2072. And there is detail regarding the ZTE extraordinary item, net operating losses, income, and some of the adjustments that have been made. So what exactly is the extraordinary item? Let's understand the same. See, the very first is, see, every business has a very routine business on account of which it earns a profit or loss. Let me give an example. There is a company, let's say XYZ company, and he's manufacturing of automobile and will earn a profit and loss from the sale of cars, trucks, buses, and etc. So, however, let's assume that XYZ wants to discontinue its car section. Let's say they want to discontinue the car manufacturing business and focus more on heavy automobiles like trucks and businesses. Then in that particular scenario, in trucks and buses, it sells the entire car making division to another automobile manufacturer for a very hefty profit. So this definitely results in profit and will be reported in the XYZ financial statement. But as an extraordinary item, as it is not the normal course of the business that XYZ has earned such a huge profit. So let's have a look at ZTE annual report. And we note that in the net profit attributable to the shareholder is RMB close enough to 2633 million. However, when we remove the extraordinary item from the income statement, the net profit gets reduced to RMB close enough to 2072 million. So what is extraordinary item? See, extraordinary items refer to the gains, or you can say losses, gains or losses from the specific business transaction, which are unusual and are rare from the normal course of the business. In other words, they pertain to the transactions which do not form part of the day-to-day business operations of the company. There are some of the key aspects which defines the extraordinary items. See, transactions which are above the material limit of an organization will be classified under extraordinary items of the company. Materiality is basically subjective to the size of the balance sheet of the organization and the industry to which the company belongs. I'll be taking the first example over here. Example number 1. In case of XYZ company, let's say if it is involved in the scrap or sale business, let's say it is in the scrap sale business of the unit in Chicago, which has led to business gain of, let's say, close enough to $10,000. Okay, and will not have any material enough to be classified as an extraordinary gain. This is because the value of the one car will be more than $10,000, which is definitely not material, keeping in mind that the entire revenue of the XYZ company is 100 billion. So a small time retailer who, let's say, the example number 2, which I will be taking. Let's say, there is a retailer who sells hot dogs outside, let's say, Central Park, and he earns royalty amounting to $5,000 for selling this hot dogs recipe to chain store, which will classify this transaction as an extraordinary item, as it is above the materiality threshold. So why is it material in this case? Because the annual profit of the retailer is somewhere close enough to, let's say, $5,000 itself. So to check whether the particular transaction is material, for reporting it is an extraordinary item, in the following 3 levels of the materiality should be checked. The first is the particular extraordinary item is material with the aspect to the total income reported for the given period. Okay. Second is that particular extraordinary item is material with respect to the annual income, of the last 4 to 5 years, you can say 4 to 5 years into account. And particularly on the third one is the extraordinary items is material with respect to any other criteria defined by the company policy. Example, a holding company may require its subsidiary companies to report all the extraordinary items above the certain threshold limit. So let's see the extraordinary items that are rare an unusual transaction. See, extraordinary items will be rare in nature. They are the transactions which do not occur in day-to-day basis. And like we saw in the case of our XYZ company, discontinuing the car manufacturing business is something which does not happen regularly. It will happen once in 5 years or 10 years, or at the time, never in the lifetime of the company. Let me show you something. You can see unusual and infrequent income from the continuing operations and other item. And what are the extraordinary items? It is unusual, yes. Is it infrequent? Yes. Then if no, then it is income from continuing. If yes, then it is extraordinary items. So important point to understand there is that here it is that not all rare, unusual, non-recurring transactions are necessarily defined as extraordinary items. There can be transactions which are non-recurring, but at the same time they are not extraordinary also. Let me give you example to illustrate the same. I'll take the first example over here. In, let's say, XYZ company feels over here that the current capacity of the manufacturing buses is, let's say, is limited, and there is a lot of scope in the market for increasing the revenue. So keeping this in mind, the management has approved to go ahead in the investing in the new plant for increasing the production capacity. This is definitely a non-recurring item. Okay. So you can say that, however, the same can be taken as increase in the capital assets rather than classifying it as an extraordinary losses. I'll give you another example number 2, which says that, continuing with the very first example of our XYZ company, where they intended to discontinue their car manufacturing business, is a non-recurring transaction, and it qualifies for the extraordinary gain. Now let me do some bifurcation of basically extraordinary items. I'll write extraordinary item as EI over here. Extraordinary items can be bifurcated into extraordinary gains and extraordinary losses. Needless to say, losses have negative impact, okay, on the profit of the company, whereas the extraordinary gains have a positive impact on the profit of the company. I'll give you some of the examples of the extraordinary gains. The examples for basically gains, you can go for like gain on account of the sale of discontinued, you can say business segments, okay, business segments. The second one I can give an example as gain from the recent announcement from government announcing previous subsidies that are to be sanctioned. So I'll write over here subsidies. I'll give you some of the example for losses. See, the example for the same are like losses on account of uncontrollable natural calamities like earthquake, floods, hailstorms, and etc. The second example, like sale of discontinued business segments, like just over here. If you are gaining, you can be losing also over here in this particular case. And then you have loss on account of, let's say, losing a legal case which had led to a huge tax penalties. The next example I can say loss on account of like long worker strike. Strike can lead to really huge losses which has disrupted the business for more than a month. So the above examples, as we have noted, are generic in nature and can vary on the case-to-case basis. Like for instance, loss on account of the flood over here, can vary. Flood can be claimed as extraordinary loss in case of the business in the area which are already declared as the flood-prone areas. This is because it is assumed that business is aware of the climatic conditions in the area and they are still willing to take the risk of doing the business in that area. Hence, this is a part of the business risk which the organization must have already taken into account. I'll give you another example which we can consider is the case of the private equity firm. I'll just write PE firm over here, which has its core business, to invest in startup. And that is its core business. So in this case, the gains or the losses from selling of the business is very normal. Therefore, it cannot claim gain on account of basically selling the long-term investment as an extraordinary gains. So basically, it is also very important, is there is a confusion with regards to, you can say, writing off or write back of various assets or extraordinary losses. So in this context, write-offs of the following business assets in the normal course of the business should not be treated as extraordinary items, like stocks, that is known as inventories, debtors, which is known as the accounts receivables, amortization of the intangible assets. Then we have loss or basically gain on account of the foreign exchange, that is the forex and other transaction, and there is a sale of fixed assets. Okay, so this is because the write-off and the write-down of the above current fixed assets are considered very normal for any given business. The following, the explanation, should suffice, which I'm going to give you for not treating it as an extraordinary item. See, inventory, which is lying, the stock which is lying in the warehouse will not get old and obsolete. This happens with almost all the business and is not part of the operational loss only. A certain part of, let's say, the account receivables, is expected to turn into bad debts in the normal course of the business, and such losses is operational in nature. In case of the intangible assets, if you see, it should be amortized on a yearly basis, just the way tangible fixed assets are depreciated on the yearly basis. The next is the foreign exchange. So foreign currency will fluctuate on a daily basis, and if there is a business requirement to enter into the foreign currency transaction, the gain or losses from this transaction is considered to be normal. The next is the sale of the fixed assets. See, buying or selling of the fixed assets is essential part of the business. Even if these transactions are rare, they are required from the operational point of view. Any profit earned or loss incurred from the sale of the fixed assets should be treated as a part of the operational income expense only. Let's see the presentation of the extraordinary item before January 2015. Okay, all the extraordinary items are to be presented separately in the financial statement. Presented it separately means that the gains or losses from extraordinary items should be segregated from the profit and loss from the ordinary operation and should be shown as a very separate line item in the income statement after taking into account the tax effect in consideration. So the company should also disclose the applicable taxes on the extraordinary item separately along with it. So they should also disclose the earning EPS, that is the earning per share EPS for the extraordinary item. Let me show you some example of XYZ company which present extraordinary item. So as you can see, there is an income statement over here of XYZ Limited company. You have net sales over here of 1 lakh. Then you deduct your C or GS, that is cost of goods sold, which gives you your gross profit. You have, let's say, some of the other operating incomes like fixed deposit interest and so on and so forth. You have operating expenses like selling and overhead, which is close enough to 2,000. You have your admin expenses as 2,500. The auditor's remuneration, you have to pay, that is 2,000. Other expenses close enough to 1,000. That sums up to 7,500, which gives you your total operating income as 47,500, which is exactly your gross profit 45 plus other income, that is 55 less 7,500, which gives you your 47,500. You have other income. Basically, this is classified as non-operating because such income, as I told you, fixed deposit interest and such interest income. So that is $500. Other expenses which are classified again as non-operating, like finance cost, again interest expense that you pay, that is 2,000. The net income and losses is close enough to 47,500 plus 500, that is 50,000. And because this is not the part, 48,000, and less you deduct 2,000 as expenses, that gives you your net income as 46,000. You deduct a 10% tax on this, that gives you 4,600, and the final profit from operation is 41,400. So if you put some extraordinary item, that is loss on account of the hailstorm, which is 25,000, gain on account of the sale of the business 15,000, and loss on the extraordinary item, that is $10,000. Savings on the tax on the above is 10,000 to 10%, which gives you 10%. So the net over here, it's going to be loss from the extraordinary item because the losses, that is 25,000, 10,000 is greater than 15 and 1. Right. So that is the detail for the extraordinary item. Okay. Now let's go down and see what other details are there. The earning per share from the operating income, that is the assumption of the company has issued, let's say 1,000 equity shares, which is 41.4. Loss per share on account of the extraordinary item will be, let's say, per share over here we're calculating. So divide by the extraordinary losses, that is 9,000, divide by the number of shares, that is 1,000, that will give you your 9 per dollar share. So the net earning per share is going to be 41.4 less 9, that gives you your 32.4. Now let's do elimination of the extraordinary items. And after January of 15, what is the scenario? See, in the January 2015, FASB issued an update on extraordinary item, eliminating the need to provide the extraordinary item in the income statement. Eliminating the concept of the extraordinary item will save time and reduce cost for preparers, because they will not have to assess whether the particular event or transaction event is extraordinary. Let me show you that article. Why is FASB issuing this accounting standard update? Here is the article of the FASB that is issuing this accounting standard update. And as you can see that, this update eliminates from the gap the conceptuality, the concepts of extraordinary items, the subtopic of 22520, that is in income statement, extraordinary and unusual items required that an entities separately classify, present and disclose extraordinary events and transaction. Presently, an event of transaction is presumed to be ordinary. So it was primarily argued that, that users find information about unusual or infrequent events and transactions useful. However, they do not find extraordinary item classifications and presentation necessary to identify those events and transactions. Others thought that it is extremely rare in current practices for transactions or event to meet the requirement to be presented as extraordinary items. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.